Hello, this is Right Side Trader. Today is February 22nd, 2025, and this is a quick trade review of my SPX Trade to a Million trade. I had another one go bad on me. Well, I had another one that I really wasn't letting it go bad. It went bad on me, and I was trying to figure out what can I do more so, again, since this is the second time. This is all for educational purposes only, too. No trade recommendation, because as I said, this trade can go really bad on you and hit you really pretty hard if you don't understand what you're doing. I'm seeming like I don't understand what I'm doing. I do understand what I'm doing. But again, I've learned and I've made some rules. The thing is, this is why I do this virtual, and all, to kind of get ingrained in my brain to take a small loss at times and all. But this is all, like I said, this is all for educational purposes only. We all know trading is risky, so that's why you should check with your financial advisor, check with your significant other, and make sure trading is something that is suitable for you. All right, let's jump over here to the charts and see what happened, and and this whole mindset of this trader here. First of all, I have to go back to Thursday. Thursday, I was able to put my Iron Condor on, 10 wide, point 0.2 delta. The market gave me an alert right here on this candle here, and all. It gave me an alert saying things are not good because I've had this happen before, and this is what ended up happening. And all, this market drop came down to the strike that we had sold, and I was kind of like, all right, let me just get out of this trade and all. I want to take that 20 cents, but this time when it bounced, near. I got these two lines down here. One of these lines, this line here, is kind of like my L2 line, my custom pivot line. This line right here is a support 3 line. Usually, you get a good bounce off these lines if they're close together like this, and the market comes down to them. This is what I've seen, and it did just that, But it came up. I didn't take my profits here, what I could have taken at the time. I didn't take it, and all. Then it came back down below here again, and this time it bounced on my line. I said, oh, and then I said to myself, the next time I can get out of this trade and all for a small profit, I will. If it doesn't happen and end up getting below here, I know I should get out of the trade, because at that time it was still almost the strike that I sold, this purple line right here, and all. I say if it gets below that, it's going to be gone through both of my strikes, because this is 10 wide, so it'll be 95 and 85. That's almost here at this line. It's going to be near max loss. So again, I need to get out of this trade. I couldn't allow it to get down here. That was in my head that day on Thursday. It came back up here in this time frame right here, and I was able to get out of the trade and all. So it ended up being an okay day. I made a little bit of money. Now, that's all staged up to get you in your crazy mindset for the next day. Next day, Friday. Here's Friday. And this is when things really went bad. Kind of like let you see what I was looking at. First of all, the alert went off again right around this time, and on this candle. My alert went off. Things are not good. And all, but I said, oh, again, but at that time, you're still in between your strike. You could take a small profit at that time, too. That's the other thing I noticed. And all, it came down here to this right here is my support 1 line, and all, and we near previous day low. That's what this line represents. And then just below that is the line where we had sold at, and all. So at this time, I got a little bit of a bounce, but then it gives me a big candle going through my support 1 line, larger than normal candle. That's another warning sign. Now I ended up down here and all again. So, but yesterday I got lucky, but I started, even at that time, I started looking. I saw my support 2 line was way down here and all. And I had 80-70. It's 80-70. 87. I was looking at that. That's going to be, if it goes down there, that's going to be below both of my strikes. So I'm at a max loss and all. And then I also looked at, okay, where's my support 3 line where I know it normally would bounce, if at all. It was way down here. So this things weren't looking good. But virtual trade, I didn't this is the whole thing. You kind of do the same thing in your virtual account that you were doing in your large account. So this is why you need to practice this stuff. You need to get ingrained in I need to get ingrained in my brain. Sometimes you just need to take a small loss and all. But I didn't on this particular day. So the thing is, I'm going to do a little presentation on things that, new rules and things that I'm setting up to go along with what I already had, and to make sure once I do, if I trade this thing in anything greater than one contract, things that I have to do, me personally, I'm going to have to do, and I'm going to go over that next and all. But right here, this thing ended up being the mother of all losses. And it just went against me. I saw this thing being down like 30,000, 40,000, 30,000. I saw it down 40,000, and I started thinking, oh, I can make that back up in a week. And then I realized, okay, this thing started getting even greater. And then I said, oh, it's gone. I was looking around and trying to see what else I could do, and wasn't too much that I could do with this trade. So I just decided to just let it go, and figure out, okay, what I'm gonna do next time, and see how well that works. But right now, I want to share some other information here with you, some other things that I'm thinking about doing with this trade when things go bad like this. All right, let me go ahead and do that and see if I can do that. Switch over to the other screen. Where's my thing? Oh, here it is. Select screen. Continue, and let me see if this actually works. Hey, there you go. SPX gone bad. If you made it to here, I'm going to actually try to give you some information that I'm thinking about and what I should do. The market is at your sell strike. Are you going to end up taking a max loss? What are you going to do now? I'll go through this pretty quick. First, one of the couple of things that I noticed, I probably should close the trade at 2 times my credit. Say I collected $1 on a 5 wide, it'd be $1 something. On a 10 wide, it's going to be around $2 and something. If it's at $4 and something, you've given back all the money you collected plus an additional $2. If you can do that, probably that's a good thing to do. The other thing is, should you close that trade for 50% the width of your strikes? Again, if it's against you that much, say like on a 10 wide, it's $5 against you. Take that $5 loss at that time if you can, if it's at your sell strike. The other thing is, can you close for at any time once you see it's going against you? Can you close for a break even? Sometimes it'll pull, like on the one on Thursday, it pulled back and gave me that 20 cents that I want to get. I took that trade that day. That was a good day, although things got better. But sometimes that's going to be the best that you get. Sometimes even if it gets back to a break even, you take that exit if you can. Because what it's going to end up being, you're going to start praying, you're going to hope, you're going to wish the market gives you another chance to get out of your trade, get out. With the mother of all losses, you're gonna hope you can. That's just the way it's gonna go. Because usually the market gets down there and it just hangs out down there. The thing is, just close the trade before you get to that mother of all losses. That's one thing that you can do. The other thing now that you can do, if you want to try to trade yourself out of this and make some of that money back, these are things that I have tried to do, and I was looking at and seeing what I could do. At 2 times the credit that you receive, say you receive a $2 credit, so now $4. Now it's at $4. At that time, it's going to have to be $4 or less on a 10 wide. It's going to probably have to be around the amount of credit you expected. I don't know if you can get. You go out there and see if you can collect, $4. All you doing at that time is a break even. Because you collected enough money to cover the loss that you had on that trade, and now this thing has to go all the way back down to zero. You have to be able to close this thing for nothing, in order to break even on this. Well, to make that $2, keep that $2 credit that you earn, but you're locking in pretty much. I think this is where you are locking in a loss on this trade, because again, you collected $4. No, you should be good. Again, that's the whole thing. It gets to where it's almost impossible to roll this thing and get out of it without a loss with these 0-day options. That's the whole thing with these 0-day options. That's why once it gets greater than the credit that you've collected and all, is because your platform is showing you you're at a break even. Pretty much, you can close it for the credit that you collected. After that, everything, when it starts showing you that you're down money, you're down money and all. Can you roll it to get it where now you're break even? You collect, $3 if it's there. If and you're down, actually you're down a extra dollar on that. Again, what I'm seeing is hard to do that. If your initial credit was $1.50, if I and you try to sell a strike for, you try to sell it for $3 a greater credit, it's going to be really hard to do that with these trades and all going out in time. I think it can be done. I saw it look like it could be done, but will it actually feel for you? That's the whole thing. So it gets back to my previous slide. Close the trade. Now the thing that you can do, once these things go bad and you want to try to trade yourself out of it, is start selling verticals. A lot of times I used to hear, again, if you got a lot of time on it, what people would normally do, they would bring down the untested strike, sell a vertical on that and all, and collect a little bit more credit. And also, since the market is getting where you can make money on that trade, and you keep doing things like that. Or you find other places in the market where you can start selling verticals and all, because you better have some money still in your account and all to do these things. And you got to have money in your account to still start selling verticals all over the place to try to collect some money. And that's one of the things that in the past that I would do. I would sell the verticals or the directional trades to start making money back. And once I show you the account, did I show you the account? I didn't show you the account, did I? I'll show you the account where that's what I kind of did and all. I did the vertical play. And then the other play that you can actually do, start doing directional trades where you're buying or selling. You're going longer in the market or you're going short in the market to try to make back some of the money. Again, usually if I'm doing that, I'm just scalping in the market. And that's what I do most of the time anyway. So again, I'm very comfortable doing that. It's just taking a few dollars or a few dimes, scalping the market to make some of that money back that I lost for the day. And all that's just a normal play for me. Now to sum this all up, based on what I've seen, it's better to just take the small loss. Once it gets to maybe whatever you're comfortable with. Me, I'm saying if I see this thing is I collected, $2, I see myself down, say $200, and I'll take that loss. If you see yourself down $400, take that loss. Take that loss. The thing is, take that loss, because now if you don't end up taking those losses, you end up taking the maximum loss. And all, believe me, that's what it can go the other way. Anything can happen, but sometimes it's just better to take that loss, and you can make that back. You're at a point where you're still in the mindset where I'm still in the mindset where I can make that money back. And all, maybe if not that day, the next days, the next days or the next weeks, based on how things are going. And all. The other thing is, if you're trying to trade that day, headache and stress, trying to make back some of your losses that day, it can be done based on how seasoned of a trader you are, and that's what you like, that's your style. It's okay for you. For me, that's what I used to do, but I stopped doing that. That was pretty stressful. That was headache days and all. It gets where you're going out for a very, very slow ride just to get through the rest of the day and all. And I just stopped doing that. And I'd rather just take the small loss myself. I'm seeing that with this trade. I'm going to have to get into that whole mindset of just taking the small loss. But if you hanged out this long, I'm going to give you some of my rules and some of the things that I look at now that I'm doing this trade. And this is why I'm doing this virtual, to help me kind of like see what I need to see, because in the beginning you don't know what you need to know. And for me, the best way, I listen to people out there. They tell you these different things. But for me, I'm the type, I need to experience it myself. And once I've experienced it myself, that's why I want to go through a full year also practicing this thing, small. If I do it live, it's going to be small right now. And to get to this size, or even a tenth of this size, even 10 contracts, is things that I need to know. Because 10 contracts, again, the way I'm doing it is $10,000, and I don't want to lose even $10,000 in this market, and all. So I'm trying to come up with a whole strategy with rules and everything I need to look at, everything I need to do, and get it ingrained in my brain. And for me, it's going to take a few months. But like I said, I want to do it for a full year and all to see that. But here's some of the rules and some of the stuff that I'm coming up with. First of all, I always have a market check. I have how I'm going to open my trade, how I'm going to close my trade, how I'm going to stop my trade. Every trade should have an open, close, and a stop, and then a market check. This is basic stuff, if you actually trying to get yourself educated and what people actually go through. This is the bonuses. This is why it's at the end if you actually made it this far. And one of the things is events. FOMC, is it an FOMC day? What news is going on? I always look at what is pre-market earnings. Is that pre-market earning? What company is actually happening? Are they one of the big ones that's going to move the Nasdaq or move the market? Option events. This past Friday was the monthly option expiration. That's usually one of the bigger expiration days. Now that we have expiration every day, you would think this wouldn't be that big of an event, but seemed like yesterday it might have been that. But that event, along with the location that we was at the top of a market, and the other news that was going on in the country, that might have caused that whole drop. Who knows? It can happen any day and any time. And then what's the overall trend? Has the market been going sideways? And that's why, again, do I do my market review for myself also? Have we been going sideways, and have we started trending down, or are we trending up? You need to kind of be aware of that and all. That's my market check. Now, when it comes to opening the trade, I say, did I pass market? It actually should be past market check. Up here, if there's anything that I don't like or not comfortable with, I don't open the trade. That's why I say, did I pass market check? That's what that's about. Then credit check. Then when I'm opening the trade, this particular trade, I'm just focusing on this particular trade. My credit check is the credit that I'm receiving on the trade. Am I okay with that? It's not too small. If it's too low, volatility is too low in the market where I'm not getting enough credit on this trade, do I really want to do this trade? Because if it's too small, again, volatility, all it's going to do based on just like yesterday, is going to go up. The volatility went from 15 to over 19. It might even got over 20 yesterday. I don't know, but volatility went up. The market went in the wrong direction. Everything went wrong with that trade yesterday. When it comes to close these trades, is at 25% of the credit that I actually collected, and all ideal. That's the whole thing. These trades usually don't have a stop. That's why I allowed, in the virtual account and a small trade, I will allow the first time. I need to see, and all. So now I needed to come up, with those other things that I came up with earlier. It's just trying to take that small loss and all. Once it touched the strike that I sold, I might need to definitely be looking to get out of that trade. Number one, the other thing is the time. Now I always said 11 o'clock. If it's after 11 o'clock, I need to get out of this trade. Because every time it's gone past 11 o'clock, it's been a bad day. I got lucky a few times, but sometimes it's just best. Now I'm beginning to see that 11 o'clock is the time that I should be at to get out of this trade. The thing is, close the trade. Avoid maximum loss. And that's pretty much it. Also, like I said, I didn't share with you guys, I don't think I shared with you guys the accounting stuff and how it looked there. So let me go ahead and share that with you. If you made it this far, I will share that with you. Let me switch back over to here. And you should be seeing the chart again. But if I minimize this, you can see, what I was doing yesterday in order to try to minimize this trade. First of all, I'll point out maximum loss here, $100,000 on this trade. But I want to also look at here where I started the day at 306. You go back here on the 20th and all. That's where I actually started the day at that day. If you look at this, I know it's kind of, you can see that. And then where I ended the day at, I ended the day at right here. You had a cash balance. Again, you see this 3.6 right here again. You know, on the 21st, right here. You see it here, and then you see here and all. So I had got up almost $80,000, and they took, you know, 100,000 out of that right there. So I ended up really, I'm down. I go back to this number here. So that's 21,000 plus another 6,000. That's $27,000 down, you know, based on where I was at. So again, I'm not, once I look at it that way, I'm not too concerned about it. I'm concerned about it that I actually took this maximum loss and all. That would never happen. Now I'm at the point, this is the second time that has happened. I would never do this again. And all. I know right now taking 50,000 a loss is better than, that's closing it for $5. You know, it's better than letting this thing go to maximum loss. $5 times 100 times 100. You have to say times 100. And that's going to give you 50,000. That's going to give you 50,000. It's better to take a $50,000 loss than a $100,000 loss and all. So that's, again, when you see that thing at 50,000, take that loss. You know, if that was 50,000, you know, again, you know, you can add 50,000. You would add, would you add 50,000 to that? Cause yeah, I was up quite a well. Yeah, you add 50,000 to that, and only taking 50,000 out of that. That'll put you at 329 and all, and then at 329 and all, you still would have been up, you know, for the week. It would have been okay. But that's all based on the defensive stuff that I was actually doing. You look at these verticals, I'll highlight the stuff for you guys because, again, you may not see exactly what I was doing right here and right here. This is the guys, some guys who were trading with me before in a contest. This is one of the things that I would do. And I would trade these big verticals like this and make my money back, and if I got down where I was losing money, and these trades right here, you can see, and why that vertical, blah 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 blah. I don't know why that's, and right here. That was the the verticals are the ones we want to take a look at. The other one is the other one looks like I got a little bit more of a credit than what it's showing right here. So these trades right here made some money back. This trade here made a little bit of money back, and this trade here made a little bit of money back. A little bit of money. I'm talking like probably a little bit over $40,000 between the two of the trades and all. And that's the whole thing of that $100,000. So making it only around $60,000 really hit me right here. And if it was only $50,000, it would have only been $10,000. I know again, you get used to these numbers. Take a look at the numbers and you'll see. But that's it. That's really all I want to share. If you made it all the way to the end, to see that, again, back to the whole presentation, take the small loss. Take the small loss. It seemed maybe not that small at the time, but it's definitely less than what that is. And that's all I really want to share. Hope this is being helpful for some. If you're interested in this trade and all, and looking at it, or you really realize now this is not the trade for you. Even with one contract, you just take away some of the zeros and all, and you see what it's like and all. That's it. That's all I really want to share. I hope this is being helpful. This is Right Side Trader. I'll talk to you next week, and I'll go ahead and put out my weekly review on this trade. But here, this is a little special to give you a little insight on this loss and how I'm adjusting myself to do this trade. Have a good one. Have a good week. Subscribe, like, share. Let people know if they're interested in this trade. I'm looking at it a little different way that I hope makes sense to a lot of us who are not all that deep into the math and all the option stuff. And it may help you guys, you know, because I can look at the math, but I like looking at the numbers and looking at the money. And I'll talk to you later. Have a good one. Bye.